Shalin and Shivangi have just got married. They are both in their early 30s. Both hold good jobs, and have decided to continue with their careers, since they are in no hurry to start a family. Each of them has some investments, typically aimed at tax savings, but neither has any large savings at the moment. They are keen to have a solid financial base for themselves, and this includes being able to buy a house of their own before they start a family. At the same time, they want to enjoy and not have a crimped lifestyle, or be too bothered about saving at this stage in their lives. What are the money factors they must consider on priority as they start their journey together? It is very important for both to think and plan practically, even though they are at an exciting and new stage in their lives. The expenses on setting up a home will be high at this stage. They may also incur higher lifestyle expenses on entertainment, travel, and eating out. Agreeing on a monthly budget, which will be based on a contribution from both, is a good way to cap expenses, and also use the surplus in this account for bigger expenses. They should use the income that remains after contributing to the expenses to invest systematically in equity funds. This will give them the corpus they need for the down payment on their house. They need to focus on having investments in their names, a good credit record and relationship with their banks, so that they are able to borrow easily when they need it. Falling into a debt trap, even before they realize it, is a situation many young couples, like them, are likely to face. Not being able to settle credit card dues every month, using multiple cards, and running a high outstanding bill, servicing multiple personal loans and defaulting on payments, are all warning signs that they are living beyond their means. This will have an impact on their credit scores, which in turn will affect their ability to borrow at good rates when they are ready to buy a house. Taking stock of their situation periodically, and taking corrective action before things get out of hand, will be a good step to ensure their financial well-being.